And so for our topics today, just to quickly introduce our speakers. First up, we have Saurabh Shrivastava. He is the Managing Director at Inrate, where he leads the creation of impact-driven data insights and cutting-edge ESG and sustainability products. Before joining Inrate, he held some key roles in leading global ESG data and ratings initiatives, focusing on product innovation and client-centered solutions. Saurabh holds a keen interest in fostering sustainable finance practices that create measurable impact across industries. And also from Inrate, we have Ayman Karwi. He is the head of methodology. Ayman is the former director of quantitative analytics and modeling at Morningstar Sustainalytics. He previously held academic roles in finance and worked as a portfolio manager at Desjardins. He holds a PhD in finance from HEC Montreal and the SCR certification. And then last but not least, we have Sylvain Forte, who is the co-founder and CEO of SESAMm. SESAMm is a global leader in controversy data, leveraging advanced large language models and generative AI to uncover ESG, reputational, and supplier risks. Sylvain holds a master's degree in engineering from INSA Strasbourg. And with that quick introduction, I will hand it over to Sylvain to take it away.
Thank you very much, Megan. Thanks very much for joining, and a big thanks to our partners at Inrate with Saurabh and Ayman for joining us for this webinar. And so we have a very interesting topic today that goes a bit beyond, let's say, the day-to-day of ESG data and traditional work that is done by rating agencies. And Inrate, you're a very established player in the space. You have a very deep expertise in ESG, working primarily on public companies. And one thing that we wanted to tackle today is really the link of ESG with supply chain data and the importance and growing importance of supply chain and ESG assessment. So maybe for you, Saurabh, to start with, and to set up the stage a bit, trying to understand why ESG matters now in supply chain. Can you explain to us, from your perspective, how ESG has become more of a priority for investors and asset managers in recent days?
Of course, thank you, Silva, and a really nice question to set up the context and really the why of why we are talking about this today. Now, as a sustainability data and ESG and rating provider who works with a number of investor clients, I can tell you that when investors are looking into this topic, they are not just doing it for optics when they're looking and talking about supply chain. They're actually doing that to protect their assets and even enhance their investment and asset values. And the primary reason I say that is because when you look at supply chains, it's not just about risk, but also about a lot of opportunities which often go underappreciated. Looking at risks, of course, this is something that a lot of people talk about, and for the right reasons, because when you look at large supplier network, they often tend to be opaque and often have a lot of blind spots, which can really later on become big blow-ups, which not only impact companies but also investors in those companies from both a financial perspective and a reputational perspective. And we have had a lot of stories and a lot of companies involved in such kind of scandals and blow-ups. We've had the case of Boohoo 4 or 5 years ago, right here in the UK, not very far away, very unexpected, because they had this production center in Leicester where, the workers were found to be underpaid and working under unsafe conditions, which turned into a blow-up, which eroded more than $1 billion from the investments. You've had the case of meat producer JBS, which was linked to deforestation, a scandal which also led to a big divestment from big investors in JBS. There are primarily three kinds of risk, as might start to become obvious that people look at when it comes to supply chain. The first one is around human rights, so labor conditions, as in the case of Boohoo or in the case of Nike with Uber forced labor and all of that. That's the first one. The second one is around environment, which I sort of categorize under deforestation, but also with high emissions. And the third one is regulatory risk, because the regulators are also cracking down into some of these areas with new regulations such as the CSDDD, the CBAM, and the EU deforestation regulations. So these are the three risks, and I would say the biggest challenge that investors today face is, in my opinion, around three areas. The first one is a lack of visibility beyond tier one suppliers, and that's where the visibility typically ends. When you think about the smaller suppliers, which are tier two and tier three, people have very little and no visibility. That's the first problem that is very relevant and big for most investors. The second one is fragmented and inconsistent data, so low quality or not accurate, not complete, not timely data. And the third one is it completely misses the regional context, because risk oftentimes, and a lot of these suppliers are small private companies, and risks tend to be very local and regional. Reporting often is at a global level, and therefore these are all sort of hidden under layers and not very evident. So those are the three problems that most investors are trying to solve, in my opinion. That's why the topic is so relevant.
Thanks, Saurabh. And I really agree with
Yeah,
you,
yeah,
especially when looking. I think this is primarily a financial consideration at the start of the process. We've seen quite a few examples of this. At SESAMm, we really focus on ESG controversy risk, and that controversies tend to have a material impact on the company's financial and market prices, which is immediately observable, but also in private markets, which sometimes take a bit longer to reflect on the company's valuation. But from that perspective, we're seeing that supply chain related scandals are particularly pricey. So they cost a lot in terms of company valuations, and they also lead to exclusions, as you said, which can have companies be sometimes banned from obtaining financing. And one very good example as well that we saw recently is with Loro Piana, which is a sort of double problem, because Loro Piana is owned by LVMH, but it's actually a small local subsidiary, which by itself was not necessarily under as much scrutiny and governance consideration as LVMH would be. And the company then, using with its suppliers, potentially forced labor, which led to massive issues for the ultimate holding, which is LVMH in the context, immediate action on the market price, investor scrutiny, lots of questions, and the like. And so we see this really at different levels. In this case, it's really about a public asset where the material impact on price is visible, almost instantaneous, and could potentially have been predicted to an extent with further scrutiny down the line. And there's also the notion of even when considering these private assets, oftentimes the risk is actually hidden inside private companies. So the private subsidiary and then the private supplier of that specific subsidiary. So that has been a very important example recently. So I think, as always, and more currently, the discussion with the impact of ESG data here for supply chain is financial impact. I think that's pretty critical.
absolutely. Absolutely. And I think it's becoming more and more evident that about 50 to 70% of the total risk for environment and social kind of risk lie within the supply chain. And with that context, Silva, with your experience of working with such a large range of players, how do you think the expectations of people like limited partners or regulators or public have sort of changed over time?
Yeah, it's becoming more important. There is one element that we observe, and which for us shows the importance in the market, is that we have a lot of supply chain partners, including large procurement and third-party risk management solutions that are coming to us in order to incorporate sustainability risk data on supply chains. And these players are not typically very interested in sustainability or ESG. But they are looking to see, especially on human rights, how these risks may have a critical impact in the same vein as they are screening for sanctions, for example, or associations with bad players. So for us, this is a very, very strong difference in behavior and change in behavior that we are observing at the moment, and which is driven notably by regulators and by states directly. Interestingly enough, one of the big drivers is actually the US state. And so all of the discussions around tariffs, for example, are driving everyone to have a very close look at supply chain, and to make sure that there isn't any issue that could be evaluated and should be screened in advance. So there's really that notion of these macro factors, which are, as we know, oftentimes playing against ESG. In the past few months, that really has been the case. In that case, playing in favor of ESG, with tariffs and also macroeconomic sanctions with Russia, etc., really playing a big role. So this is very new in terms of expectations, and I'd say that more regulators and in the background, the public. With regards to LPs, GPs, etc., we see that supply chain is becoming a standard component in a lot of ESG due diligence processes. So some of our clients are consulting firms, for example, such as Ramble, or we have IT Finance as well, using us for consulting purposes. And we also have major US law firms that have sustainability practices using us in order to perform their preliminary due diligence with a sustainability angle. And so they are really incorporating this supply chain element. And this is one of the strongest demand that we're getting in the private markets transactional services components of our business, is to include more due diligence on supply chain. And that also links to these supply chain partnerships that we are building, as we all know that mapping tier ends in supply chains is fairly difficult. And there are a lot of great players that are playing in that field and that can help us map this supply chain. And maybe a last thing, Saurabh, you were insisting in human rights, and I fully echo this. The main topic that we see is human rights issues. So both due to regulatory pressure, and also in general due to the number of scandals that have emerged on human rights issues in supply chain and the impact that they have. We see this as the main component right now, and definitely the main topic of interest when dealing with supply chains.
Absolutely, yeah, 100%.
And maybe to understand a bit like tangibly what can be done there and the different approaches, it'd be great maybe to have your view, and I know you prepared a few elements as well on the approach itself. So
Absolutely, yeah.
at Inrate, you have very established and detailed qualitative and quantitative data methodology. If you're able to link that a bit also to the work in supply chain sustainability, we'd love to have some concrete elements in this.
Absolutely. Thank you, Silva. Very happy to do so. And Inrate, like you said, started off with analyzing 10,000 public companies, but very quickly, as we started working with investors who were looking at suppliers, we also realized that a lot of these companies we are dealing with are small private companies. So we sort of adapted our public methodology to suit some of that approach, but with some additions, and of course, with our partnership with SESAMm also coming quite handy in this whole approach. So what I'll do is I'll probably walk through what Inrate does, and how Inrate sort of goes about this evaluation of some of these private suppliers. And how we sort of also work together, which with Silva you can also throw some light on also later. So our approach is very simple. We try to go from the limited ESG visibility that we have on these small suppliers to a more extended ESG and data visibility. And the way we do that is through a three-step process, largely speaking. One is the first one, it starts with customized questionnaires, which are sector-wise tailored questionnaires that we send to these suppliers in partnership with either a PE fund manager or an investment manager, depends on who we are working with, even banks who are sometimes evaluating such companies. So in partnership with them, we send out these customized sector-wise tailored questionnaires, which cover a number of data points across their policies, practices, operations, targets, metrics, and everything else. It is also mapped on the back end to our own rating methodology that we have adapted from our experience on the public side, so that we have sort of a big or a larger amount of collected data than is just available through public sources, given a lot of these companies are private. We also ask the companies to upload and submit supporting documents as much as they can to these data points that they have submitted. This includes all of the documentation, internal documentation they have, and some of the publicly available reports as well. And the last point is a really critical one, which we call quality assurance, which is an iterative process that we have with these companies. And I'll delve upon this a bit more in some later slides on how we go around quality assurance. But this is really a critical and a very value-adding part because I was mentioning earlier that one of the big problems for our investor clients is fragmented data and quality that they can't just rely on when they get submissions directly from these companies. So that's where Inrate adds a lot of value as well. Megan, if you can move forward, I can throw a bit more light on our workflow on how we typically engage with these companies. It's a workflow that we have over time optimized to make sure that we have the most accurate, complete, comprehensive, and timely data available. So like I said, it starts with a survey, but even before the survey, we start engaging with these companies by way of an onboarding call and orientation call where we sort of explain to them what this process is and how this is going to be run. We give them a detailed walkthrough of those questionnaires, and in our experience, we get a lot of questions back where people ask, how not only how they want to go about the questionnaire, but the whole process of rating and assessment, and clarify a lot of doubts on some of the sustainability data points that we ask them to submit. This is aided by a lot of features that are built into the questionnaire, i.e., help me options or inbuilt error tracking and warning options and warning features that the questionnaire itself has. This moves on to the submission of additional documentation and data validation. Once we have the complete data and what we think is the highest possible quality of the data, we basically plug that into our rating models to generate what we call an impact rating, which we can then share with the clients. This, of course, is augmented with our core business activity analysis, which is very custom to the business model of the company, but also controversies, the news and events for which we source from you, Silva, from SESAMm. Megan? So that's a bit of a couple of screenshots from the questionnaire. On the left image, you see that this is very intuitive, where we sort of have these information signs against each of the questions we ask. In this case, it's scope to GHG emissions. We provide a place for people to enter the metric, but also just on the bottom right side of the page, you see once you click on that information metric or information icon, you have a full explanation of what this question is meant to ask and what they're meant to submit. This is also augmented by an availability of an Inrate person who's assigned to them during the kickoff meeting, who they can reach out to for additional questions. But we have seen in our experience that just by including some of these information items in the questionnaire itself, it has increased over time the quality of responses we are getting and the back and forth that we have with these companies, making it that much more simpler. Megan? That's really an illustration of how the inbuilt error tracking system works. In this case, this is on the first image on the top left. This is a completeness problem that the survey is highlighting. The person has missed the first line. You see there is no radio button ticked, and it is going to stop the person from going forward with that questionnaire. And this makes sure that we don't have to go back and forth with the companies to ask for additional information where they're actually meant to fill in. The bottom one is a little bit more on the quantitative side. So here the question is for them to enter their total GHG emissions, which is actually turning out to be more than what they have submitted for scope 1, 2, and 3 separately. So this is an addition mismatch, which the survey is pointing out to them and as an error, and asking them to either correct it or override this with a comment, so that Inrate understands why this mismatch actually is happening. Again, that's a reminder for the person filling the questionnaire to not go forward without reviewing their response. If it is supposed to be an erroneous response, um, like in this case, or at least write a comment for Inrate to understand why they want to overwrite the error message. Megan, if you can go forward. So by now we've got the maximum amount of data that we can get from a company by way of these survey responses and the supporting document submission. The next step is quality checking, which I was earlier explaining is a really critical factor in the whole process, and a lot of our clients tell us that that's our maximum value add. There are several layers of quality check that happen. On the left side, you see it starts with rule-based automated checks, which themselves actually filter out a lot of problems. Moving on to some of the manual review, some exceptions that the checks highlight, our analyst team typically picks up and manually review those to make sure that there is consistency in the responses. This generates a feedback loop, not just for our own error tracking mechanism, but for also the company. And also then there is iterative improvement with the companies to make sure that at the end of the process, we have a validated ESG data set, which we can confidently plug into our rating models and generate the assessment from there on. We also validate the data that has been submitted using multiple sources, and it's not just validation, but also filling in the gaps, because not always do we get all of the data from the suppliers and private companies. So we look at primarily 5 kinds of data points, starting with what's reported by the companies, but also we do use a number of estimation engines that Ayman is going to touch upon in the webinar in a short while, to fill in the blanks or fill in the gaps wherever the company is not able to submit any of the data. We also use derived metrics, which is basically could be a combination of two reported, two estimated, or a reported and an estimated data point. We also validate this data from a number of public sources. It could be NGOs, it could be industry reports, and so on. And of course, there is data collected via the survey itself, where data is not available publicly, but the company is able to submit to us that data. That's the overall data collection and validation process. I'm going to pass it on to Eamon to talk a little bit more about estimation methodologies and our
Yeah,
rating process overall.
excellent. Many thanks, Saurabh and Sivan, for setting the scene. It was really very helpful, kind of providing an overview about the supply chain and also the database. I will mostly focus here on methodological aspects and mostly on modeling and estimation without making it overly technical, I think for the benefits of all of us. When we talk about estimation and modeling, I mean, we mentioned it initially in the ESG part. One of the challenges, of course, is coverage and collecting the data, especially when we talk about companies that are small, that are in emerging markets, that do not disclose for many reasons. Could it be because it's very costly, or this is not the priority, and so on? But still, from an investor standpoint, this is still a very, very interesting information. This is a valuable information. And this is also very relevant for investors because they want to enlarge their scope. They want also to invest in different parts of the world, in different companies, but they also want to diversify, ensure they want to diversify their portfolio. And for that, this is where estimation come into play. In a very simple way, we need to fill those gaps. We need to fill critical gaps wherever it is possible. So with that, we are able again to provide a much larger coverage, provide a better overview, and also track those companies along the way. Now, when, and why can we use application of estimation and modeling? I think the first thing is we can also estimate right away for this time being all these scores or all GHG emission or indicators, but we can also use them to forecast, right? You make a prediction of next year, 2 years, 3 year, or next quarter. And I think this is also where modeling is very important. Many of the portfolio manager do not necessarily use the information to make decision on the spot, but also for having kind of forward-looking approach, which is very helpful and then can help them make a more informed decision. You can also the same way look at the trend, look at the track, and make some of the progress immediately available. Interestingly, when we were talking about reported and non-reported, we say, of course, for a reported company, you have the data that is readily available. This is great. And for non-reported, you use the model because you do not have data. But the other way around is also interesting. So even for a reporting company, for company for which we do have data, modeled data can serve as a good benchmark, as an oversight. You might have some reported data here coming from companies, and as a way to check that accuracy of the data, it's also worth it sometimes to go look at modeled data and see are there any issue with misreporting, underreporting, or even greenwashing. And for that, so this is why reported and estimated data, they go definitely hand in hand. So the two go together. The last pillar, I mean, we talked a lot about in the initial part of the webinar is the up new word of AI and advanced analytics and machine learning. So of course, I mean, AI is really at the start. It upended the whole industry. We are now using more and more AI in different part of the methodology, but also in the data collection, in the operational part. It's a really fantastic tool that leverage so many possibilities and made our work more accurate, faster, and in a sense much easier. Think of it, I mean, when we talk about the introduction, we talk about sustainability. And one aspect or one unique aspect of sustainability is that we face, for the most part, unstructured data. So data come into textual, into unstructured, unlike financial reports where we do have really a standardized format, where we have everything is much more easier to handle. So here, we have a nice technology that is coming really, I would say, at the right time. We have AI coming in really into play, and we have almost scrambled data or mixed data from different sources, different languages, different things that is still, however, very important and again very relevant from investors' point. So we do the mix of two, and we get the best of it to come up with AI model, machine learning model, natural language model to turn all this text into signals, then into scores, then to investor sentiment, then into something that down the road our investors or client can use. In a sense here, we do have an amalgamation of disciplines, right? So it's kind of a mix between data science, operation research, computer science, economics. So all the people are working together for the benefits of people that are investing money in a socially responsible way. The last part is mostly related to the supply chain we mentioned here. So it's more difficult, of course, to collect information about suppliers, more difficult to collect about remote area and etc. So with estimation, you can get additional information and you can really have a nice idea about the whole value chain and not only the emergent part of it or the visible part of it. So it's also really important to know that the part that is not disclosed, it's also a lot of risk. Saurabh was mentioning about that initially. So you want to uncover that part and perhaps also chase at the same time all the opportunities that are behind that. With that estimation, I think it's very, very relevant. To wrap up this slide, I mean, there are four different ways, or at least four different views to construct a model. So if you were to, let's say, set up or create an estimation model, you can go top-down approach, have a macroeconomic and sectoral information. So that would be one way. The other way, if you want to predict, again, any sustainability factor or sustainability emission or characteristics of the company, you can use the firm own characteristics and factors. The other way, third way, we were mentioning for private company is the use of surveys. So you can collect information directly from companies. And I do think this is a very straightforward, but at the same time, it's really a powerful tool because this is the way you can collect the right information from companies and also from other any type of services could be news, controversy, and other things. So this is in a short, simply to provide in a nutshell how we can construct an estimation model and what type of sources we can use. Megan, if you can move to the next slide. Yeah, here I move to a side topic which is also related to the first one, is simply to provide an overview how we assess our methodology at Inrate, how we provide an ESG impact assessment for a company. It is mostly based on three complementary pillars. So the first pillar is related to business activity. The second one related to corporate disclosure assessment. And the third one is ESG controversy. So the first one is mostly related to the company activity itself. You are in energy, you are in renewable, you are in clothing, you are in things. So inherent to that, you are bearing some systematic risk or sectoral risk that is directly linked to your activity. So this is the first part of your assessment. You are there because of your activity. You are likely to face the same risk as those companies that are in the same sector. So this is the first one. Second thing is more specific to the company. So even though you are in that segment or you are in that sector, companies do not react the same way. And so they are likely actually to behave different or have different ESG performance. They have different ESG performance indicators. And this is how good is the company in managing those aspects. And this is definitely the second part. Now, the third part is everything that is not business as usual, everything that is going off track, everything that is what we call controversies, things that are not captured in regular days. So it happens that companies do not go the same way as planned. They underreport, they do not disclose some information, or there are things that they did not think of or they are not planned. And all of these are captured in controversies, which tend to be sporadic, one point in time, not necessarily on continuous basis. But still, the good part of controversies is they capture information outside from what is reported by the company. In that way, it's really a nice and powerful way to complement the information. So you can see here the Inrate approach is really very complementary in the sense that we have three pillars. The first one is really coming from the sector wide. Second one coming from the company itself. So all the reported information. We do not base all the assessment on everything that is reported. We also look at third-party data and all the controversy. With that, we have what we think is a comprehensive assessment of the company, ESG profile, and we are able to provide a meaningful score. So let's continue the other slide, please. So here is simply an overview about controversy. Of course, this is a pleasure to have it from SESAMm, and SESAMm provide us from billions of news pieces. I mean, the database is quite huge that we filter that goes through different steps. And of course, the whole challenge is how you get out of this sea of news, how you turn it into meaningful signal. And this is where the methodology came into play. This is where you need to create a framework to assess and convert those news into something that is more scalable, more interpretable, and in the end more usable, right? In a very timely way. So this is also another feature, valuable feature of controversies. Controversies do happen the same day they are disclosed, and they are also taken into account in a very continuous way. So this is also something very valuable. And here we simply provide some ways, some questions, how you turn those into. We can think about durability, whether the company has taken corrective action or not, the credibility of the event, the size of the event. With that, so multiplying all these parts, you are able in the end to get a score that would tell you how extensive or how big is the controversy or how impactful is that controversy for the company. So this is the way in a nutshell how controversies framework is built around these parameters. Last slide. Here, that's the same thing. So this is initially our ESG impact rating, split into different pillars, the environmental, social governance. I think these are very standard in the industry. We further divide those into business activity and corporate social responsibility, mostly coming from corporate disclosure. We then deduct the effect of controversies. Controversies here are taken as a negative event or something that we need to deduct to finally get the rating, including controversies. We of course weight these according to the relevance of this E, S, and G to that firm or subsector or activity. and then we end up with the final ESG risk rating. So this is an overview again, without being overly technical about the methodology, about the supply chain, about also the way we use estimation. With that, I mean that we can move to the next thing, to the next topic, sorry, and which is the use or the role of AI. I mean, AI is everywhere, and I think we are using that on a daily basis. I was looking at Sylvain. I was wondering how you can tell us a little bit more about how we can use AI in at SESAMm.
Thanks a lot, Ayman and Saurabh as well for the presentation. I'm very glad to see the SESAMm data incorporated as well in the platform, and we really appreciate the collaboration with you and the Inrate team. And yeah, and indeed, we see controversies and AI as an additional component, which is that independent view that you were describing, which is complementary to estimates and to internal disclosures, and which is one of the few tangible points that can be collected without engagement with the companies. And that means at scale, because many companies say a list of Chinese suppliers may not respond to disclosure questionnaires, or there may be additional information that is missed. And so we see really controversies as a good way to have additional data that is specific to each individual company, and also that is very live, as you said, Ayman, updated on a daily basis, very timely, and that incorporates that risk component. And so this is the first thing that I think is very important, is AI allows us to screen that public data and find that independent view from journalists, from NGOs, etc., who are doing a great job reporting on companies' activities. And the second thing is AI allows us to provide that coverage. So finding firms that are not public, so private companies in countries that are potentially more difficult to access in terms of coverage, say South America, for example, or Asian countries, when there is a local language barrier, there is a notion of this information not being contained in Anglo-Saxon media, for example. And so AI allows us to massively expand this coverage to millions of companies, which is one of the key things for a supply chain, because again, most suppliers, a large majority of suppliers are not publicly listed companies, even when the companies working with them are public themselves. And so that plays a big role. So if you don't mind sharing just the screen again, Megan, I'll similarly review just in 2-3 slides the methodology so that you can see exactly what it looks like and specifically what it means for supply chain monitoring, which is a service that SESAMm actually provides as well directly to corporates, and also working with supply chain and procurement solutions. So integrating with large supply chain partners or providing this data for due diligence. So the AI process that we have is, there's a huge data lake. We have 30 billion documents in the background that we screen systematically for any request, and also add 10 million documents daily to find potential risks. We can then screen any universe of companies. So say a universe, for example, of 100,000 tier 1 suppliers. That may seem a lot, but this is actually typical for a large listed companies to have 100,000 direct suppliers. And you can imagine that tier 4 supply chain or tier 3 supply chain in that context is in the millions of companies to track. And as we've seen in some recent controversies, at least tier 2 to tier 3 supply chain can come back to bite back investors investing in the ultimate parent entity. So we can track any different companies. We match to a number of different private entities identifiers and local identifiers. I think we have more than 100 of these, and also well-established identifiers such as DUNS number across the supply chains. And then we specifically filter for controversy risks across around 42 different risk categories, and of course the 3 main pillars: environmental, social, and governance. So this may be a child labor accusation as part of the social pillar on a specific company in Indonesia, which we would track then in the local language, so covering local languages with our AI system. And at the end of the process, we then do a preliminary assessment of the severity of the controversy. And we use similar pillars that Ayman was describing and Saurabh was describing. Things like, what is the legal materiality, financial materiality of the controversy? How many people are impacted? Has there been a fine, and if so, of what amount? And so this helps us reference a score between 1 and 5, with 5 being the highest level of controversy. And so finally, we generate these daily scores and alerts, which clients receive via email, inside our dashboards, via API, via Databricks, many different methods, depending on what they want to do with this data. So sometimes it's more of an investor perspective. I have a due diligence to conduct on a private company. I know about their top 10 suppliers, and I need to verify that there is no adverse information on them and no major risk. Or it may be more of an internal corporate exercise. I have 10,000 or 100,000 direct suppliers, and I need a good way to prioritize engagement and to have a good way to monitor risk across that supply chain, not only focusing on a specific region of interest or a specific sector, but do it as globally as possible. So we can go to the next slide. And so there's another element which we covered, which goes beyond controversies actually, which is business involvement screening, which has been more and more of a demand. So this is a requirement like for Article 8 funds, etc. But we see that demand emerging more and more in supply chain monitoring. There are a lot of clients that do not want to work with suppliers that are involved in some kind of controversial activity. And these activities are not necessarily linked to a specific event, but to the business of the company, such as involvement in the tobacco sector or recreational drugs, for example, or involvement in fossil fuels or nuclear energy, or even things like predatory lending. So this is used for supply chain screening. This is also used for secondaries. So a lot of funds in private assets are using this for secondaries transactions where they have to screen like 100 or 200 assets at once, and also for credit transactions. And just a note on AI, as Ayman, you were mentioning AI. So this is actually a set of agents. And so this is really live compute. So a client actually provides a list of companies, say, okay, I have these 100 companies, 200, 300, 500 companies that are suppliers or credit lines or anything. And then the clients then receive directly the files enriched with these exclusion categories and with a summary, with the sources, and with explanation for the potential involvement in each of these categories. So here we're not just touching AI, not just generative AI, but that kind of new buzzword, which is agents. And it's actually a real one. Like it's really an agent doing that work and then sending you the file. And that's pretty powerful. So our clients really like this. And on the next slide, and the last one is again really AI driven. A lot of clients, I was mentioning the due diligence use case. So a lot of clients now want to have specific suppliers included in due diligence reports. And this could be on an infrastructure project. This can be related to an SPO, for example. This can be related to a public company, a private company, or this can be related to your own suppliers, so for example. And so at SESAMm, we have modules, again, with generative AI, where we're able to condense and structure all of the information into a PDF report automatically. And that report is generated within 15 to 30 minutes, fully automatically, with every data point sourced and linked to an individual document and the like. And this is something where we have a lot of demand to incorporate more supply chain element. And we developed a specific module where a client can input not just the name of a company of interest, but actually some further indication on the corporate hierarchy and a list of suppliers directly, so that the agents then loop on the list of suppliers and incorporate the supplier risk into the final report as part of the company assessment. And this has been a direct demand from one of our quite prominent clients in the transaction services space in the United States, which I find interesting again, is that ESG pushback in the United States is sometimes compensated quite a bit by the need for further transparency and risk assessment in the supply chain itself. So that's really about what we do with AI and at SESAMm. And again, very happy to partner with Inrate on this and to provide this data and these capabilities with more coverage and a lot of independent view on a lot of specific companies and millions of firms. So I think going back just to the conversation with you, Saurabh, one thing we're probably missing is a few users of the data in practice, how investors or procurement teams, etc., are looking at this data. And if you can give us some tangible use cases or workflow and processes that you've encountered.
Absolutely. Now, looking at the time, I'll be really quick on this one. But there are essentially three big areas that I want to talk about where we engage with our investor clients around these use cases. The first one is monitoring and ongoing monitoring, because like I said, 50 to 70% of the risks lie here, but also opportunities where people are trying to enhance their holdings in companies which they find more resilient, more efficient with supply chains, and also which help them be more regulatory prepared because of all the disclosures that they now have to do. So monitoring is one big use case, both from a risk and opportunity perspective. I would say the other key use case being the regulatory use case itself to report on some of these things on a regulatory from a regulatory standpoint. And the third one is more on the active ownership side, where this is an input to voting and engagement kind of conversations, and people do use supply chain inputs and supply chain resilience to engage on, but also to vote on AGM. So these are the three big use cases that we see of our work. The other one, which is slightly different one with banks, is a lot of banks actually look at private companies and particularly suppliers and their riskiness to lend to them. So the sustainability loans for private companies is also one big use case.
It makes a lot of sense. And on our side, I think we would categorize the two main use cases as just due diligence and monitoring. So due diligence is what I mentioned on transaction services team that get requests from investors to look at the supply chain as a vector of risk. And these teams being in consulting firms, in law firms, sometimes in rating agencies as well when they're doing their research. And the second part is really that growing segment of GRC, third-party risk management, which starts incorporate sustainability risk. And we actually have two major partnerships that we're going to announce soon, but they haven't been announced yet, so I cannot name them immediately. But two partners that are incorporating our data to track hundreds of thousands to millions of companies directly and linking them to their own workflows and identifiers. So stay tuned. We're going to announce that very soon. And we're very glad for these developments. We see this as a good way for sustainability data to make its way into other segments where it is really perceived as very, very critical operationally because sanctions, human rights issues can be breaking points in the supply chains as well.
Mm-hmm.
And Saurabh, any thoughts on maybe just best practices, things that clients should be aware of and that they can do better with that kind of data and these assessments?
Yeah. Again, I'm going to rely on the top three that come to my mind. Is that the first one I want to say is that you can't rely on self-reported data alone. You can trust, but you need to verify. And I think some of the survey-based, controversy-based analysis that we just saw is a very good way of verifying what's being reported. So trust but verify, and don't rely on the self-reported data alone. Is the first one I want to say and talk about. The second one is I think it's very intuitive by now, is that the best way to approach this is a combination of AI and human abilities, because speed is of essence, but also the depth and some of the nuances that methodology and human can pull together also are important. So a combination of AI and human is one of the best practices that I've seen working in this kind of analysis very, very effectively. And most of the investor conversations we've had is around that. And the third one, I think, is how do you put this into use? So of course there is investment decision making, which is critical, identifying opportunities, not just risk, but also using this and taking a step further to engage and actively own some of these companies and transform these kind of supply chain to have a real impact, I would say, is the third one that I want to talk about. How about you, Silva?
For us, I think it's really the usual message is assessing companies directly. So going beyond sector, going beyond geography. I've seen that a lot with CS3D related inquiries from corporates at the time when CS3D was more trendy, I'd say. And the logic was always to screen for a specific high-risk geography and a specific industry, and usually stop there. But I think examples that we've mentioned, like Loro Piana, for example, or Boohoo, etc., show that in some cases, and quite often the companies that are generating massive issues are not necessarily where you would expect this. So Loro Piana, this is in Italy, and there's not necessarily a lot of controversy in that part of the industry. It's everything is under the radar, and a small screening would not have allowed clients to discover this information. So I'd say be careful of hidden risks, and that the approach now there are data sets everywhere like this. The approach should be as exhaustive as possible and should cover every possible company if feasible. And the second thing is just again, be careful of small companies. Small companies are hidden everywhere, and these are typically, and it's not necessarily their fault, but they don't necessarily have the same level of governance practices that big companies have. There isn't the same level of scrutiny, and so discovery of issues may come a bit late, and this may escalate rapidly afterwards. And so I think private companies are extremely key for all investors right now, and not just private equity, private debt investors, but anyone that is looking closely at risks in the market.
Absolutely.
All right. Well, thank you everyone for the great comments. We're going to have a quick wrap-up question. I know we're over time, so anyone who's in the audience, if you still want to ask questions, please feel free to submit them. If we don't have time today, we'll certainly follow up with you afterwards. But just to wrap up our webinar a little bit, can we tackle what do you think is next in ESG supply chain analysis?
Well, I can go first if you'd like, Silva. From my point of view, I would say the following. The first one is the regulations are only going to tighten, and the tariffs will mean that the trade is going to be a lot dependent on how these supply chains perform. So if you are a supplier trying to export to the EU, if you are not compliant with EUDR, you will not be able to export. You'll basically lose that business. If you are a company which is sourcing from a supplier which is not EUDR compliant, you have a big operational risk on your hand. So that's the first one. I would say from a cost perspective, dirty supply chains will be more expensive supply chains, and that is something that is coming. It is growing, and you can see that happening. And last but not the least, I think it's also equally important to focus on opportunities and not just risk. Supply chain analysis is a lot talked about in the context of riskiness, but I also want to sort of shine a little light on opportunities that lie within supply chain. So if you're trying to invest in companies which are more resilient, which are more efficient with supply chain, where supply chains are such that make the company more prepared for regulations and tariffs and so on, these are the companies that are probably the companies to invest in terms of opportunities.
I agree with this, and maybe to add a few words, I think also what's happening and what I hinted at is that a big change that's coming is that ESG is rapidly making its way into supply chain risk analysis, and it's probably not going to be called ESG, but it is there. And I think that's something that's going to have significant impact because it means that suppliers are going to be under more scrutiny, and this is going to standardize business ethics and business practices globally. And this also creates opportunity to shift supply chains towards players that have more responsible actions that will probably become easier and easier. So an additional transparency. And related to this, AI is probably going to play a big role in this. So on our side, we see AI already as a way to increase coverage, and so meaning increasing transparency, finding more data. Our job would not be possible without AI, and we wouldn't be able to enter the supply chain segment without AI because we couldn't cover these many companies. But I think it will go way, way beyond this as people incorporate these AI agents to perform full workflow tasks. I fully envision that people will progressively integrate these AI agents working with your data at Inrate with our data to get an holistic view of what a supplier is doing, accelerating the path to getting the disclosures, updating the disclosure element more rapidly, understanding every single update of a policy, and also sourcing these controversy lives to then have a sort of centralized dashboard for procurement purposes. So this is coming, like this is rapidly coming. both with new entrants in the market, but also existing players that are incorporating agenting capabilities such as ours to accelerate the time to help make a decision, basically.
Absolutely.
All right. Well, thank you. I think we better wrap it up for here today as we've gone a little bit over time. But thank you, everyone who joined us. Thank you to our speakers, Saurabh, Ayman, and
Thank you.
Sylvain. This was a great webinar.
Thank you, everyone.
Thank you very
Have a
much.
great day.
Thanks all
Thank
for
you.
joining.
Thanks,
Bye-bye.
everyone. Bye-bye.